performance overall today. I guess one of the highlights was the materials space and also the banks sort of recovering from early losses.
Absolutely. I think the Australian market did pretty well today given the start that we saw this morning. I've got the intraday graph behind me and you can see that on the open we did see some sharp losses, but throughout the day we made up all those losses and in the end we actually ended up flat. So that's quite a good result given that we did see the US market down by 0.3% overnight. There weren't any real clear trends on the market today. The best sectors were the materials and the telecom sector. That's one growth area and one defensive area. And then on the downside, the underperforming sectors, the worst was healthcare and property. But a light volume day. I think some people still on holidays or down in Melbourne for the races. $3.8 billion worth of stock being traded. Also, if we have a look at the stock that's in focus today, Commonwealth Bank, we saw an all-time record high there, $78.40. The stock up 1.3%, so a great performance by CBA. The other area we were watching were the iron ore miners. Some fantastic performances coming through. Atlas Iron up 6.7%, Fortescue up 5.2%. We're still seeing very strong iron ore pricing, despite most analysts expecting a bit of seasonal weakness. November, December is the winter period in China, and usually when steelmakers tend to slow down, but what we are seeing is restocking of inventory at the moment, and that's helping iron ore prices. The gold sector was one area which was down, the gold subsector down by 0.9%, but one stock that's been bucking the trend this week is OceanaGold. Ever since it came out with its quarterly report where it had reversed losses and come back to a profit, the stock has been moving, and OceanaGold once again up by 3.5%. And in terms of stocks making highs, a lot of them were iron ore miners. We saw Mount Gibson Iron, Fortescue, Arium all reaching 52-week highs. We also saw Commonwealth Bank as well as Xero reaching an all-time record high. 52-week highs also for Australand as well as Reece and Australian Pharmaceuticals. So all in all, a pretty good day for the market, even though it was a slow.
It affect the banks on a whole, the performance going forward this week?
Well, that's a key question for the banks, and it was pretty amazing watching Commonwealth Bank's performance today. The stock was up by 1.3%, an all-time record high, hitting $78.40. And remember that this is the only one out of the big four banks not paying a dividend in November. It states a difference, so it pays a dividend next in February. So the fact that it doesn't have an upcoming dividend in the rest of 2013, and yet we've seen strong support for the share price is absolutely incredible. It's our biggest bank, it's our most profitable bank, and it's the most expensive bank as well. But given that we are expecting to see the other three banks trading ex-dividend in November, that's expected to have a short-term blip, and I think in December that will actually have a positive effect because of dividend reinvestment, that money hitting shareholders' wallets, and some of that money finding its way back to the share market. So dividend season will be important for the banks, but I think come December, when that money actually hits the pockets of shareholders, that's actually going to end up having a positive impact. And really what we have seen in this profit reporting season for the banks is the ability for the banks not only to support current levels of dividends, but also increase their levels of dividends as well. We saw Westpac coming out with a special dividend of 10 cents. Westpac had some excess capital. And in the case of Commonwealth Bank, we've actually seen first quarter profit of $2.1 billion, and that's up 14% from a year ago. So that's a very strong rise. You don't usually expect those type of rates of growth to come from the banks. So I guess in terms of the banks, we're just watching that dividend growth because that has been a key supporter of the share price while interest rates have been falling, but also bad debts have been falling. We saw asset impairments falling by $4.3 billion for the Commonwealth Bank, so that's a pretty big amount.
Absolutely. David, when we know Xero, I believe is how you say it, it continues to break records. Tell us what happened today.
It's absolutely ridiculous today. The stock ended up 17.9%, no announcements coming out. And in fact, just over the last 2 weeks, we've actually seen the stock doubling in price. So 2 weeks ago, we did see a placement at the $16 mark, and at the time that was a 1.1% premium to the market price. So $16. Today we saw the stock more than doubling that, so $32.50 was the high that we saw today. Now, if we have a look at Xero, it's a cloud accounting service, and they recently did this placement because they want to expand globally. So they want to expand from 211,000 customers up to 1 million customers, and in particular they are targeting the US. And it looks like what's happened is that a number of US investors have gotten quite interested, and there's some international demand coming through there. Having said that, there isn't a lot of turnover in terms of the Australian share market. This stock is also listed in terms of New Zealand, but the last couple of sessions, yesterday Xero was up by 10%, today up almost 18%. It's been a fantastic one.